Crypto versus mutual funds. Which is better for you? Whether you're a beginner or looking to diversify your portfolio, this video will help you choose the right path for your goals. Let's break it down! Welcome to Smart Money Makers, where your money learns to work for you. Today, we're diving into one of the hottest financial debates. Crypto versus mutual funds. Which is better? Understanding the basics. First, let's understand what each investment is. Mutual funds. These are professionally managed funds where your money is pooled with others and invested in stocks, bonds, or a mix of both. It's like hiring an expert to grow your money steadily over time. Cryptocurrency. Crypto is a digital currency like Bitcoin or Ethereum. It's decentralized, volatile, and offers high potential returns but also high risk. So one is stable and slow, mutual funds. The other is fast and risky, crypto. But that's not all. Returns and risk. Returns. Mutual funds give 10 to 15% average annual returns in the long run. And crypto can give 100% plus returns, but also major crashes. Risk factor. Mutual funds are regulated, diversified, and low risk. The crypto is highly volatile and often influenced by market hype or social media trends. If you want stability, mutual funds win. If you're okay with risk for higher gains, crypto may suit you. Accessibility and liquidity. Accessibility. Anyone even with a mobile app can invest in either, but mutual funds usually require KYC and bank linking. Crypto is 24/7 and doesn't depend on the stock market calendar. Liquidity. Both are liquid, but mutual funds may take 1 to 2 days to settle. Crypto can be sold instantly, but at unpredictable prices. Regulation. Mutual funds are tightly regulated by SEBI in India and SEC in the US. A crypto is still loosely regulated, making it riskier for conservative investors. So, which is better? Choose mutual funds if you want safer, long-term growth. You prefer expert-managed portfolios. You're not comfortable with high risk. Choose crypto if you have extra cash to risk. You're tech-savvy and follow crypto news. You want faster, but riskier, returns. Or do both. Put 80% in mutual funds for stability and 20% in crypto for growth. Final tip: don't blindly follow trends. Invest based on your financial goals, risk tolerance, and time horizon. If this helped you, like, share, and comment, and subscribe to Smart Money Makers. Thanks for watching.